All right, welcome to the Sushi Onsen AMA, where we host projects that have partnered through the Onsen program and give them a platform to reach a larger audience. Today, we have members from the Vesper Finance team with us, Jeff and Jeff. Welcome to the sushi community, guys.
Thanks for having us.
Thanks. I'm gonna let the big Jeff do the talking.
All right. So Jeff, do you want to give like a broad explainer of what Vesper Finance is and what you guys have been up to?
Sure, and thanks for having us on. Vesper Finance is a yield automation platform. We're focusing on simplicity, ease of use, and access for retail and institutionals to compound their crypto very simply. So we're not going to be one of the platforms that offer a curves three pool XLP APY pool or something super complicated like that. We're really going for if you want to deposit your ETH and compound it, come to Vesper. You want to deposit your WBTC and compound it, come to Vesper. And it's kind of that simple message and that simple goal. Being one of the gray hairs in crypto, I got a lot of my gray hairs from being in crypto all these years. The user experience has been not so good. It's been a story of a little bit hard to use software, maybe a little bit too nerd heavy. And I'm a programmer, so that's fine with me. But looking for the average everyday user, that's something that we have to fix. I have several of my friends who are very technically savvy, but they're not crypto folks, and I had them give Uniswap a try 6 months ago. I had them give Vesper a try as we launched a couple weeks ago. And those are really the folks that I was paying close attention to in terms of feedback. So we've got that platform really focused on ease of use. We've got a well-known team. We've been doing DeFi for a number of years. One of our previous projects that I'll give a shout out to, Metronome, had one of the first AMM dexes out there. It's kind of a prehistoric trivia at this point. The world has much better technology, cough, cough, known as Sushiswap, among others. But we were doing DeFi before DeFi was kind of a word. So a well-known team. We've been doing smart contracts for years. This is an audited platform, audited by two separate audit firms, as well as our own internal checks and balances. Really just trying to bring our professional software engineering background to DeFi. We're, kind of the opposite of, the test and prod culture, right? Is any code that gets deployed, it's gone through a rigorous set of off-chain private tests, and then it goes through a set of beta pools, which people can see on our development site, vesperdev.net. And then once it kind of passes the sandboxed mainnet trial by fire, it moves over to production and our production site at vesper.finance and the app at app.vesper.finance. So just trying to professionalize the experience, simplify the experience, and go with a simple line of easy to understand products. So it looks a lot like yield farming, but we have a number of other product lines down the road. A collateral backed stable coin, a deposit X earn Y type product, kind of like inverse finance, if anybody's
Sure.
familiar with that. And we're going down that yield automation path. There's so much more blue sky landscape available that people just don't know about right now. One of my favorite projects to reference is Pool Together. If people are not familiar with the Pool Together project, it's a kind of like a lottery where everybody deposits some capital, some time passes, and then you withdraw 100% of your capital, and someone won that lottery. That's an example to me as a smart contract programmer and yield engineer. That's an example of yield automation and programming your yield and doing new and interesting things in DeFi that you couldn't have done before. Another example of that is a directed pool, which is, for example, for hodlers who want income, they can deposit ETH. This is a future product. Deposit ETH and then earn stablecoin for your daily spending money. You don't sell your ETH; you're holding it, but you're still getting that daily spending through Vesper's modular yield automation strategies. So we have a number of pools or vaults, one for ETH, USDC, DAI, and WBTC. And again, the experience is deposit and compound your ETH, deposit and compound your BTC. We wanted to keep it as absolutely as simple as possible. So that's kind of Vesper. I won't say Vesper in a nutshell because that was a bit of a long introduction. But we're really proud of what we built. We've been in the space for a long time, but we are a very young token, just launched around about 2 weeks ago or so. And Sushi was a big part of that launch. And I'd love to talk about some of the things that we're doing with Sushi in the future as well.
Yeah, yeah. I mean, I would say that wasn't a super long explainer. I've definitely heard longer. um, some of the points I thought of when you were talking. So you talked about the security and sort of audits and things that you guys go through internally for the vaults. What sort of security and auditing process do you guys go through when you're looking at the strategies and the other protocols that you're essentially integrating with?
Yeah, that's a really good question. We and brings up a point that I had forgotten. We label each of our yield sources, and we're sourcing from platforms such as Compound or Aave or MakerDAO. We qualify each of our downstream yield sources as either conservative or aggressive, kind of a liquidity scoring. And that evaluation is both qualitative as well as quantitative. We look at how long has that protocol been in market? Is the team known? Is it audited? How much real money has passed through this platform? How much uh, transaction volume has passed through that platform? What's their history of hacks? And if they've been hacked, how did they recover? Or did they leave users pissed off, or did they make users whole? That sort of
Mhm.
due diligence. And if it passes the minimum bar, then it qualifies as an aggressive strategy, and that would be a harvest or a yearn. And if it qualifies for an even higher bar, a compound or an Aave or a MakerDAO, then that qualifies for the conservative labeling. There's also, by way of detail, conservative also gets into collateralization ratios and some other details deep inside the strategy. But at a basic level, we're doing due diligence on all our yield sources, and we do a lot of live testing after that due diligence just to make sure that it works well with Vesper. And then finally, as you kind of hinted at, we have modular strategies. So each pool can be upgraded to different yield strategies without disturbing the pool, without messing around with user assets, etc. All non-custodial type setup that you'd come to expect. So that conservative versus aggressive liquidity quality scoring really goes into how we generate yield for the products. And one of the roadmap items is to, if you look at app.vesper.finance, they're all conservative right now. And one of the near term roadmap items is to release some of the strategies with the aggressive yield sources, and those will obviously have higher APYs.
And those will get launched to like the beta pools section, you said, and they'll exist there for a while and then move on.
That's exactly right. There's a kind of a staircase, a risk adjusting staircase that we take our code through. There's some off chain testing and back testing, and then there's this sandboxed live mainnet real money testing with the beta pools, and then the final graduation step is the main app. And at each step of the way, we're beating it up, testing it, and making sure that the deployment matches what the source code auditors audited. So, to software engineers, this is a pretty familiar CI/CD pipeline, continuous integration, continuous deployment, but it's a hyper secure crypto version of that. So we've really thought through and professionalized that deployment of new strategies and qualification of yield sources.
It's awesome. I've never heard of the continuous deployment. Uh, I don't know. CIDC, I think it was what the
Yeah,
mentioned.
CI/CD. Yeah, we techies, we love our acronyms.
Yeah. What just because I've never heard that term before, sort of like what type of um sort of structure to like an organization would be working with something like that? I guess like probably like anything involved in like clearing houses or banks or something like that.
Well, it's more on the side of describing a software engineering production pipeline. If we were, building automobiles in a factory, they'd have a process, similar to this. Ours is virtual, where somebody writes a new strategy, they come up with a great algorithm, whether it's one of the Vesper team or say a whiz kid in Shanghai. Uh, we take that source code, we put it through a rigorous set of QA tests, essentially quality assurance testing, to really beat it up, find the bugs. And there are multiple steps at which you might find bugs and correct them along that production pipeline. So it's mainly a software engineering detail of how you set up that say 10 or 15 step process, going from I just wrote some source code on a napkin when I had a great idea to I can trust this source code with $1 billion in assets.
Gotcha. So it's sort of ties into that internal sort of collaborative debugging process and auditing process.
Exactly.
And I just wanted to make a point here that if anybody has any questions at all, or if they have anything that they wanted to bring up, feel free to indicate that you want to say something. It's totally open floor. But I did have a question about the. I think you mentioned that it was something that you guys are working on in for the future. The vault where you would stake like your ETH in it, and then you would be getting a continual stable coin. Uh, is it
Yeah,
a
that's
stable coin
right.
yield?
Our internal name for it is income pools. I'm sure the marketing folks, some of whom are on this call, are furiously coming up with a better name. We engineers don't know how to name things, but an income pool is really focused on crypto hodlers who they don't want to sell their ETH, they don't want to sell their BTC, but so we provide an experience that's a whole lot like staking, where you deposit one coin and then you get some other coin while it's deposited. Only in this case, we already have built these modular yield automation strategies. So it doesn't take our engineers much effort at all to spin up one of these pools where you deposit one token and then you buy another. And that's a really, really powerful and not fully explored pattern. I call it deposit X, earn Y. We've seen it in staking, including in sushi, where you stake your sushi and you get X sushi. There's also using yield automation, some interesting patterns that you can do for charities, for crypto funding. To provide an example, you can have a decentralized startup funding model where everybody in a community deposits funds, they're locked up for 90 days, and then you withdraw 100% of your money. So, you're literally losing nothing but the opportunity cost and time. And during that 90 days, of course, we're using our yield automation to build up a funding pot. And then whatever decentralized governance mechanism you prefer, snapshot.page or sushi voting or something like that, you can choose to approve a startup's funding proposal. So you just introduce kind of costless VC or evergreen VC fund, where future VC funds they might not ever actually spend money, just lock it up for certain periods of time. So it's a whole new model for investing, similar to charities. Is kind of like Pool Together, which I mentioned earlier. It might do more good in the world if we have charities where you just deposit, you lock up some money for 30 days, you can withdraw your money after that, and you funded an orphanage or an anti-poverty program or a climate change program or something like that. So these kind of new interesting funding models, totally unexplored for the most part, and that's what some of that deposit X earn Y pattern allows you to do. So you can do the income stuff, the charity stuff, startup. You can also address a long tail of. I've just came up with Jeff Coin, 10 minutes ago, kind of making up a coin. And I can go to Uniswap or Sushi and create a market, but I don't have any way for people to deposit and earn Jeff and or Turtle Coin, to pick on our moderator.
Don't use
So
that.
if you want to earn Turtle, you can use one of these directed pools. That use the yield automation. You deposit some Turtle, and then you can, or excuse me, I have that backwards. Sorry. You deposit some known coin like ETH or USDC, and yield automation buys Turtle through Uniswap on the open market, creating some additional yield and buying pressure. So, really a powerful primitive that we're going to roll out in the future. There are a lot of possibilities. And honestly, I want to stoke the community's imagination and solicit that the community come up with some ideas for deposit X, earn Y, and some of the yield automation from that.
Yeah, that's it's an awesome idea where you can sort of have like a community decided VC fund almost, or like you said, like make it easier for people to basically passively donate to charities instead of like feeling like here goes out like a big chunk of cash, just like a percentage of interest they're earning.
Yeah, you're giving up your opportunity cost, and but you're otherwise not losing capital. And hopefully that can inspire some people to donate to charity who otherwise would not. If you say, "Hey, it's kind of a donation, but you get your money back," that after that throws them for a loop, and they reboot their brain. They think, "Hey, that's a pretty good deal. I help I help this church or I help this charity or whatever, and I get my money back. I'm not losing anything."
Yeah, and also just want to open the floor again in case anybody has any questions. I don't want to steamroll over you.
I'm sorry.
All right. I You mentioned earlier that you had a beta period. How did the beta period go for Vesper Finance, and were there any sort of insights that you guys took away from that?
Just that we were very happy that we did it. Again, this is kind of part and parcel of professionalizing the DeFi development experience, and not just rolling something out and hoping for the best and then finding bugs. We did a beta before our token was launched, and so that might be a subtle point, but it limited our beta TVL intentionally so that we're not putting a lot of money at risk initially. We did find a few minor bugs, none in the code itself, more in the user interface, where we're trying for that ever more seamless user experience. But that allowed us to really kind of take our own pools through that beta experience that I described earlier, the risk adjusting staircase, where you test it with a little bit of capital and live on mainnet, then a little bit more and a little bit more, and slowly increase the amount of capital and user traffic you point at it. This is intentionally taking, again, best practices from software engineering. What a lot of the audience might not know is how Amazon.com rolls out new software. They don't just hit update and the entire website's got a new update. What Amazon.com does is called a staged rollout. Amazon.com makes a new software update. They do a lot of internal testing, and then the first public visibility of a new software version is delivered to like 0.1% of all the visitors to Amazon. And if that succeeds and the software update doesn't cause lost funds or otherwise bugs, it goes to 1%. And then 2% of the traffic sees the new version. And up and up and up until 100% of the traffic is on the new version. And each step of the way from, say, 2% sees the new version, 98% sees the old version, every step of the way, engineers are behind the scenes running checks, making sure that all the users are their funds are safe, their shopping is safe, and the software is performing as expected. So we basically took a page out of Amazon.com in how we roll out smart contracts, and that beta period was an example of that.
Gotcha, gotcha. It's interesting. I knew that they did rolling deployments for updates to like major websites like that, but I never I always just I don't know why I always just assumed that was like a like just like a server load type deal. But it makes a lot more sense when you're saying that they're actively, checking everything and making sure that as they scale up, there's no critical flaws. And I don't think we have touched on the tokenomics. Do you want to explain how that works for the VSP token?
Sure. It really ties the room together, as I say. The revenue system that comes with Vesper, it was very consciously designed. Each of the Vesper pools takes a withdrawal fee, 0.6% withdrawal fee upon withdrawal of the amount you're withdrawing, and then a 15% interest fee on the yield generated. All those fees are going to kind of a central collection point. I call it a smelter, where those pool tokens are liquidated through Uniswap and to the VSP token. So, in other words, all the fees in the Vesper system go to buying back Vesper on the open market at spot price. And so that creates a daily buying pressure through dexes on the VSP token. And then the final step in that path is that the VSP that gets bought back is sent to a special revenue pool, VVSP, where it's similar to the other pools in terms of a depositor experience. You deposit your VSP and it automatically compounds. But that's a special pool, a revenue pool. It's not bonus or reward pool or anything of that nature. 100% of the VSP that gets sent to depositors of VVSP, that is system revenue. So that's kind of the revenue system that ties everything together, and it's intimately connected with the VSP token. A little bit on developer incentives, and then the rest of tokenomics. Part of that revenue system is that 5% of a specific pool's fees go to that pool developer. Right now, the pool developer is our firm, Block, but this is an open invitation to external developers who want to have basically a never-ending revenue stream. Design a great strategy. We'll help you test it. We'll give you beta capital to test it on mainnet. We'll pay for audits. We'll really give developers that kind of white glove experience. And then at once deployed, again, developers get 5% of the gross fees before it goes to that smelter and into the revenue system. So that's an opportunity for external developers to really plug themselves into the Vesper system. But to the rest of the tokenomics, it's broadly broken down as a 65% to the community and 35% to partners, advisors, and team. And the community portion is further divided up into a couple million in, or I think it's 3 million. I don't have the slide in front of me for incentives for the pools. Another million and some for liquidity mining incentives, and this being a Sushiswap AMA, we of course want to highlight that we're sushi first and sushi heavy, meaning that we've allocated the more incentives to sushi LPs under the liquidity mining program than any other DEX. So we're big fans of sushi, and we did that very consciously.
Awesome. Is there
But
Sorry,
go ahead.
I was just gonna say, is there dual rewards for that pool, or is because I know some projects um, try to connect the sushi rewards with the native staking reward. Um,
That is coming soon.
Gotcha, gotcha. Awesome. That's exciting.
So
Um,
basically, the just for the audience to understand, because that's been an FAQ. The We are spinning up a claims process whereby people who are in Sushi Onsen will can claim VSP weekly as an incentive. That's being spun up in approximately 1 to 2 weeks. Temporarily, we have a geyser set up where you deposit your Sushi LP tokens and you receive VSP through gysr.io. That is not Sushi Onsen, so it's kind of you get a choice of A or B right now, but in 2 weeks, where it's going to be A plus B, 100% at Onsen.
gotcha. Well, that is exciting.
But yeah, one other to finish out the tokenomics, we've got product and liquidity, product and DEX incentives, but that's not the whole picture. We, two big things, two big takeaways, which we feel are important. One are the revenue system, that buyback, which I mentioned, and the other is that we have reserves. We have reserves that the community can vote to deploy for whatever purpose helps Vesper, whether it's hiring developers or paying for more marketing or other liquidity programs. That is all up to Vesper governance, and so we're happy that we took a lot of lessons from 2020 and a lot of other projects that came along, and we felt it was very important, like sushi, to connect the product usage to the token, and that's the revenue system and that picture.
Yeah, yeah, absolutely. The VVSP staking pool reminded me a lot of X Sushi, and I think that entire sort of system is like one of the most efficient sort of simple and to the point um, sort of models for revenue stream back to token holders that I've seen. Um, there was something I oh no, there was something on the tip of my tongue, and now it's slipped away from me. Oh, the you said the reserves. How do the reserves or community treasury get built up?
Right now, it is purely just the initial mintage. We carved out a portion of the token mintage and just set it aside
Gotcha,
so that it
gotcha.
could be deployed in the future. Right now, just in terms of governance setup, there's a multi-sig. We're actively interviewing externals to add to the multi-sig, but in a few months, the Compound Alpha governor module from Compound, in fact, that'll be the main governance method, and people will vote with their VVSP. So you got to be in the pool and holding VVSP to vote.
Are there any have you considered voting power for VSP ETH LPs?
Definitely, we're looking into all that. It's definitely complicated to kind of reach into a pair and account for that, but we've it's a popular request, so you're not the first one to bring that up.
Yeah, I definitely don't doubt it's complicated. I'm sure that there's like I don't even know. You would maybe have to do like almost an oracle check to see how much VSP each LP token represents at the time. But I don't exactly know how that would work out. But
Yeah, it's a tough math and economic challenge because the balance, as you know, in each LP pair changes with each trade.
yeah, yeah, but it's good to hear that it's something you guys are considering and thinking about.
Definitely.
Um, Also, do you guys want to touch on sort of your strategic advisors and investors and sort of the opportunities that they've opened up for you?
You're totally putting me on the spot.
I'm
Uh,
sorry.
I need to pull up a Medium post to like reel it off like a good professional. Let's see.
Yeah, no worries.
I am scrolling through vesperfinance.medium.com if you want to follow along at home. There's tokenomics and overview. Inside Vesper Multipool, I encourage everyone to check that out. Multipool is pointing one pool ETH to a bunch of different yield sources. So it kind of aggregates, it's kind of a meta aggregator, is a good way to put it. But net, you hodl your ETH and you get a healthy APY. Strategic partners and advisors include some of the names that a lot of y'all have heard from Robert at Compound or Ryan at Masari or Meltem at CoinShares. Definitely they have added a layer of input into I can't specifically disclose like X person did Y,
Yeah, yeah.
but intentionally speaking, generally, they have added a layer of, I'd say, market intelligence and insight. I'm, personally speaking, I'm more on the nerd side, the engineer builder side, and I really lean on my co-founders, Matt Rozak and Jordan Kruger, as well as the partners and advisors to give that kind of extra layer of market insight, how to launch, where to launch. Some of the advisors, in fact, pretty strongly point us in the direction of sushi, which is why we arranged the incentives the way we did,
Get those
as well as
investors
just
raised.
doing due diligence on sushi and liking what we saw.
Awesome. So like an extra networking layer for sort of all aspects of the project, allowing you to get additional insight and opinions.
That's exactly right. And so, some of the higher up strategic partners that I don't know the audience really knows too well, but all crypto natives: A195 Capital, CMT Digital. That's a large Chicago proprietary trading firm. Kinetic Capital out of Hong Kong, Digital Strategies out of Asia, HCM Capital, which y'all have probably heard of as Foxconn, the maker of the iPhone. Capital Six, Veriblock, TRG, several others as well. That's not just a layer of insight, especially in Asia, but we're really targeting an Asia expansion, and some of those partners are helping us open that up.
Gotcha. And I hate to be all over the place, but this multi-pool, could you expand on this more? Is it basically like if it's a vault that is getting like ETH yield, for instance, you deposit ETH, but if there's a better yield somewhere else, it'll swap behind the scenes to get you that yield and then convert it back to ETH?
Kind of, but it's more we're addressing a issue of all yield strategies have an absolute limit, after which point the APY just really falls off. And so, just as a concrete example, if ETH is earning 1% APY at the compound lending market, and we dump $1 billion worth of ETH in there, the APY is just going to fall to the floor. That's just basic yield, supply and demand. The more
Yeah.
you supply to a market, the less yield there is.
Yeah. It's a
And
yield
so,
concept.
what you have to do is you have to expand. Sorry, there was someone else was creating a lot of noise there. You have to expand to multiple yield strategies in order to get maximum APY. Otherwise, you'll be 100% of the market at Yearn, and you'll be 0% of the market at another lending platform. So the multi-pool will spread capital across, say, 8, 10, 12 platforms all at the same time, and then it's just changing the ratios at which, yeah, we want to have 10% over at Compound, 20% over at Aave. Oh, the market changed. Now we want 20% at Compound and 10% at Aave. And it's constantly changing those weights for where we're sending the ETH, depending on various markets. Sometimes the trading markets produce more APY. Sometimes the lending markets produce more APY. That's really the dynamic component that is spiders across all the yield sources and ropes them in.
And is that a manual rebalancing, almost like it's a portfolio, and there's a portfolio manager who can swap between a certain number of assets, or is it there's some uh, almost like back end keeper integration where there's like a contract that you can call to update sort of like the Oracle prices, and it'll automatically rebalance based on that?
That's a really, really good question. Nobody's asked that in an AMA before, so you get a gold star. Um,
Yes.
the It's a very key question too. It is not actively managed in terms of it's just going to look at the health of markets, and it's more of a robot managed based on how much liquidity is at Compound, how much liquidity is at Aave, at Yearn, at Harvest, etc. So it's much more on the robot side, the automation side. We're very much pro automation. With that said, and kind of a teaser idea, some people have been lobbying for a V human pool, meaning that you use the multi pool that I just described, and you allocate to certain human managed wallets, people managed, actively managed wallets, and they manage the strategies however they do and generate yield back to Vesper. And it's kind of gamified where, the better you do, the more it trusts you with capital. Obviously, there are a lot more details behind the scenes, and ways that it can spectacularly go wrong. But at the same time, it's a really interesting idea that might pull us away from our sort of robot-driven, automation-driven shape that we currently have.
Yeah, that's awesome. I love both the automated approach and also the idea to have a human automate or human managed pool. Um, because like my only concern there with that type of system, which I think is the optimal, and it should be automatically programmatically updated, is that if say like one platform had an exploit and then all the funds from that protocol disappeared, and then it would try to automatically rebalance back into that protocol, it'd be like dumping it out. um, but I also think that's probably easy to account for if there was some sudden massive change in balances.
Yep, yep, and you can actually sandbox it pretty well. Again, with the multi-pool technology I mentioned, It's I boil it down to an analogy of a spreadsheet. And right now, the robots are updating the spreadsheet with where the yield allocation should go. There's no reason why a person couldn't do that as well. And all they're doing is updating allocations. They're not actually touching funds. They're not even managing a wallet. They're just changing ratios for various assets. And obviously, yeah, again, that could be gamed. There are always ways to do evil,
Mhm.
but that's a pretty sandboxed way to let a human start actively managing. Is just let them, pick the ratios, and then the algorithms pick the best picker.
Yeah, and in that situation, even if there was some funny business going on, at least in this situation, you would be able to actively see, them trying to, I guess, fuck with, uh, exchange rates in some minimum way or something like that. But it is a super cool strategy with the multi pool. And just another reminder to everybody, if anybody had any questions that they want to ask, it's a totally open floor. Feel free to speak up.
Hey Jeff, I just had a quick question. It's very cool to see that, the total value locked jumping up so high since you guys launched, about, 2, 3 weeks ago. I was just kind of curious, as you guys like launch more pools and stuff, like what's the timing on when, we'll see like other pools like Chainlink or, the other stuff you've mentioned kind of come online?
We're looking at a month by month pacing, so we'll release new products on a monthly basis. The March tranche will probably come out towards the end of the month, since we're still dusting off, getting the dust off from the launch. But you'll see April products, May products, et cetera, et cetera. Some will be bigger than others. Some will be minor. Since we have modular strategies, it's pretty doggone easy to push out a pool for nearly any ERC20 that's whitelisted on any of these major platforms. So we literally could create a link pool tomorrow with a 15-line Solidity deployment script. It's more about can is there a market for Vesper that makes sense in terms of the revenue model, or is it kind of a flash in the pan? And so that's more of it's less about building and engineering and more about business development and quantitative analysis as to what makes sense as the next products. And we also want to hear community feedback as well as to what should be the next pools. Link is probably, I'd say, the top three in terms of requested from the community. So that's very specifically very high on.
Excellent, thank you.
If anybody's a fan of open source, we're fully open source. All the user interface is JavaScript. We're gonna post that on GitHub, but obviously JavaScript is open source to your browser. All the smart contracts are open source at Etherscan. They're all verified as is good practice, and we're going to post a GitHub repo with that collection as well. Big fans of open source. I've been doing open source since 1992, so I'm kind of a open source boomer, I guess. But that's kind of how we roll. We've got to do it open source because that's the way that the community can prove to themselves that Vesper is trustworthy. When I found Bitcoin in July of 2010, all of these claims could have been BS, right, from Satoshi, but I was able to download the source code, compile it myself, and prove to myself, look under the hood, and prove that it's not just a payment scam sending a whole lot of tokens to somebody's wallet. This was new and different and world changing, and most importantly, I proved it to myself through open source that Bitcoin was something real. And we want to carry that standard, as we carried it through Metronome into Vesper.
Blowing my January 2013 entry to Bitcoin out of the water. Your 2010, freaking, that's amazing, man. That you knew about Bitcoin in 2010.
Yeah, it was an amazing Slashdot post. It was appeared on Slash.org, News for Nerds, which back then was a pretty popular site. If you got listed on Slash.org, it would take your website down. You got so many visits and web traffic. It was called the Slashdot effect, and Bitcoin got slash dotted, and the rest was history. That one post to that one website not only led to me finding Bitcoin, but a lot of other kind of Bitcoin OGs. That's where the famous or infamous Mount Gox exchange and Jed McCaleb discovered Bitcoin. He's now over at oh, it's not Ripple, Stellar. He's now over at Stellar.
Yeah,
But
Stellar's
a
great.
lot of original developers and community members found Bitcoin from that one post, and that kind of kicked off everything. And I remember in 2014, one of the two, I was rooming with this gawky young dude who was a writer for Bitcoin Magazine, and he had some ideas for kind of a better Bitcoin that did smart contracts, stuff like that. That was Vitalik,
What the?
and so got to kind of see all the blockchains when they were born, and going through fits and starts and dramas and everything in between. It's really been amazing, and kind of wouldn't have it any other way.
Yeah, that's an amazing story, man. You've definitely been in blockchain and on the leading edge of DeFi for a long time.
It teaches you to be humble as well. One of my first lessons coming into university at Georgia Tech, coming out of high school, I was kind of like, hey, I was the big computer nerd. I knew computers and better than everyone else, et cetera, et cetera. You get to high school, get to college, it's like a slap of cold water in your face. It's like all these guys are so much smarter than me, so much better than me at computers, and you just kind of sit back and you're like, okay, I'm humbled, and I'll just absorb a lot of this genius, and hope to do some good for the world along the way. And that's how you kind of felt with Satoshi or Vitalik, et cetera, in the early days.
Yeah, the early days were it was a different world than now, or even it was a different world in 2017 even. It was very, very different. Do you think this is a good time to go into the uh, questions and answers?
The QA contest.
Yes, yeah.
Yep. I've got those questions. Or do you have those as well?
I am scrolling to them right now.
Okay. Yeah. Either or, I can announce them.
Yeah, go for it. I don't have them ready at hand. That's all you gentlemen.
Yeah, so just to let everybody know, Vesper Finance wanted to run sort of a small contest where they ask certain questions about Vesper Finance, and then there'll be 3 questions, and the first person to answer each question would get a small reward. And I am seeing here that the first question, if this is a good time, is drum roll please. At what ETH block height was Vesper launched? At what ETH block height was Vesper launched? Was the question. First question.
And post your answers into the general chat, and I'll record whoever gets it first.
And to just give a hint, a lot of these answers could be found by looking at the Medium, the Vesper Finance Medium blog.
I think the reward is 5 VSP per question, right?
Yes, sir.
Well, we have an answer here from
We have an
Alpha.
answer that is not the right answer. Oh, we got a few coming in. Looks like Ravage on my screen. Ravage
Yeah, I
711
see Ravage
got it
first.
first. Neck and neck.
That's harsh dubs, yeah.
Ravage, DM me your Ethereum address, and then we can go on to the next question.
Yeah. The next question is question number 2. Everybody get ready. On what date did the Vesper incentivized beta begin? On what date did the Vesper incentivized beta begin?
Oh, that was a quick one. Gon's got it.
Oh, God.
Gon, December 22nd. We put the hard one first, I guess.
Yeah. And okay, question number 3, guys. Question number 3. Approximately how much trading volume took place within 24 hours of Vesper's launch? Approximately how much trading volume took place within 24 hours of Vesper's launch?
Looks like AP got it. 100 million.
Yep, AP. That's what I see.
All right, so Ravage 711 Gon and AP, DM me your Ethereum addresses so I can get your VSP rewards over to you.
Sorry, what's the username just so I get it right?
Let me put it in chat. Ravage 711 Gon and AP.
All right. I also wanted to, ask again. Did anybody have any questions that they were thinking of, or any topics they wanted to bring up? Well, have a chance every day just to ask developers about their project.
I guess just a quick one. Is there any plans to launch this on any other dexes on Avalanche or?
Strong, yes. Definitely going to be bridging both the VSP token as well as the pool tokens to other chains. That will allow you to jump between pools for a lower gas fee, among other things. And then that's kind of short term. and then the medium term is sourcing yield from other chains outside of Ethereum L1. So actively looking at Avalanche, XDAI, and several of the L2s as possible yield sources.
Thank you.
Hi, I had a quick question. How does Vesper Finance ensure that it's sustainable with its yield? Because from my understanding, the rewards decrease every month. So how do you ensure that it remains an attractive venue for people to invest or pool in?
Yeah, good question. Is basically the general economic model is that you want to sweep people in and then continue to build the system revenue through product releases and APY improvements. So it's a improve current products and release new product strategy, which will both contribute to the bottom line of that VSP buyback that forms the revenue system.
Great, thanks.
Awesome. And if you are a developer, how would you go about um, sort of starting to work on a strategy for Vesper?
Well, as mentioned, the source code is public. So I would first go to our pools on Etherscan, and you can get. Actually, I'd start at GitHub VesperFi /doc/doc. That'll get you a list of contract addresses that are deployed, and you use those with Etherscan to grab the source code, and then you can start playing with testing your own strategies once you have the source code in hand. So
Awesome.
I'd start with the VesperFi GitHub and go from there.
And we also had a question from Danny Sayo. How do you work to expand the community and become more known? What are you planning in the project with other DeFi ecosystems? Do you plan to have technological alliances or be more competitive, I guess?
I think it's more of a broad umbrella strategy, more the former than the latter. Is that we really want to have a laser focus on a good institutional user experience, a good retail user experience, just a kind of passive deposit and forget income type experience. And when you make that conclusion, when you set that goal, that kind of answers the question, and the answer to the question is partnerships. And we're going to be. It's I think less about competition and more about there are a lot of hungry young projects that are going to act as feeders into Vesper's APY system. And so it's ultimately, if you think you're a competitor, why don't you pick up the phone, talk to us, and we'll just point a fire hose of deposits at your project. Obviously, your project has to, pass all our rigorous due diligence checks that I mentioned earlier in the call. But that's kind of the everyone's our friend type of strategy. Is with DeFi, every friend is literally a function call away, and it we feel makes no sense to kind of create drama and static and stuff like that when a month from now you can be sure that karma is going to be knocking at your door and saying, hey, you need to partner with these guys because it makes sense for your users. Why did you go through all that drama and static? So the kind of mature play is just believe in karma, treat everyone as your friend, and partner with everyone on the planet.
Make love, not war.
Well, we're a little bit over time, but so I think we need to wrap it up. But
Yeah.
this has definitely been a good session with some good questions.
Yeah, this was awesome to have an opportunity to talk with you and get you guys onto the sushi forum and or the Onsen AMA, sorry. um, and to make the larger sushi community aware of the project. Thank you guys very much for coming on to the Onsen AMA. Where can everybody find Vesper Finance? And perhaps if you want to shout out like your social media, stuff like that.
Yeah, the easy way to find Vesper Finance is to go to vesper.finance. that'll
Awesome.
that'll that'll hook everyone up. We got our socials on there. We got our Discord, our Telegram on there. The Discord is kind of if you really want to participate in the project, that'll be your first step. We have product feedback channels, developer channels, as well as other social channels as well. But Vesper.finance and go from there.
Awesome. Um, just like just one last check. Anybody have a question they want to ask? Just last check. All right. Awesome. Thank you guys so much for coming out. Um, I will be messaging you in the group we got, but take it easy, stay safe, everyone. And also, an announcement just to everybody who's here. There's going to be another AMA tomorrow. There'll be an announcement about that today, soon. So just stay tuned. Thanks, everyone.
Thanks for having us.
Yep. Thank you.